SST College of Arts and Commerce. This is SST Edupedia. Myself, Assistant Professor Mithili Gaurishankar, going to teach you the e-banking module 2 of SY Banking and Insurance, IT Banking and Insurance 1. Electronic transfer of funds we are going to cover in this topic. This is an electronic debit or credit of customer account. Before the transaction of amount happens personally, nowadays it was doing by electronic transfer using the debit or credit card. Bank customer can buy goods and service without carrying cash by using credit or debit cards. Their cards are issued to the customer by the bankers. This system works on a PIN. PIN means personal identification number. After that, smart cards are introduced. Now we are using the application for paying like GPay, PayPal, etc. In this topic we are going to see basic idea of electronic transfer of funds through the cards. The customer swipes the card by using the card reader device to make the transaction. That is the process of using the credit card or debit card. The development of electronic banking and internet banking helped the customer to utilize their service using the cards. There are many types of banking. We are going to see their types. First one, telebanking. It is increasingly used in these days. It is deliver channel for marketing, banking services. A customer can do non-cash business related banking over the phone anywhere at any time. That is ubiquity. Automatic voice recorders are used for rendering telebanking service. These are the uses of telebanking. Using the telephone call lines, the banking are the transactions are happens, that is telebanking. Mobile banking. The telebanking is doing by telephone lines. Mobile banking is using the smartphone. How the banking service are used, we are going to see here. It is another important service provided by the bank recently. The customer can utilize it with the help of a cell phone or smartphone. The bank will install particular software and provide a password to enable a customer to utilize this service. So mobile banking is used through the banking application. PIN numbers are available for the security purpose to use the account, and phone number are tie-up with the application for more security. And others cannot be logged in without the permission or notification of the phone. Next one is home banking. Without going directly to the bank, from the home, how the banking can be done is going to see in this topic. It is another important innovation took place in the Indian banking sector. The customer can perform a number of transactions from their home or office through telebanking or mobile banking. They can check the balance and transfer the fund with the help of a telephone. But it is not that popularly utilized in our country. It is not much popular in our country. Next one is internet banking. Through internet, there is transaction of the amount taking place, and all the banking work from home can be done through mobile banking or through PC or laptop. It is recent trend in the Indian banking sector. It is the result of development took place in information technology. How much the information technology is developing, according to that, the benefit of using the banking by the customers is discussed here. Internet banking means any user or customer with personal computer and browser can get connected to his bank's website and perform any service possible through electronic delivery channel. There is no human operator present in the remote location to respond. All the services listed in the menu of bank website will be available. So once we open the website through the proper login, then we will get all the option what we want to do. If we are opening RD, FD, everything, every option is there, and form is available. After that we can take the option of interest also, monthly, quarterly or yearly. After that, submission of the form will be take place in the internet itself. Once the confirmation mail or SMS we have received, the process of RD or FD will be activated without our visit to the bank. Demat banking, that is getting the shares and dematerialization of the banking account is demat banking. This is a recent extent in the Indian banking sector. The customer who wants to invest in stock market or in share and stock need to maintain this account with the commercial bank. So this is the tie-up of stock market with the bank and the customer. The customer needs to pay certain annual charges to the bank for maintaining this type of account. So this is there is the service charge for demat banking, and for the stock holder or stock seller dealer, it is convenient for do the stock without wasting their time. The transaction of the shares will be happen and the amount will be credited to the account itself. Next one, the use of cards, that is credit cards. A credit card is a small plastic card was issued to the customer who is having the account in the bank. It allowed its holder to buy goods and services based on holder promise to pay for these goods and services. The issuer of the card creates a revolving account and grants a line of credit to the customer or the user, from which the user can borrow money for payment to a merchant or as a cash advance to the user. So credit card benefit we have seen. Another use of credit card is after spending amount, some voucher will be given to the credit holders. They can use that also, rewards or voucher also. Next, credit card is different from the charge card. A charge card requires the balance to be paid in full each amount, but credit card is not like that. After spending the amount want to pay. In contrast, credit card allows the customer a continuous balance of debit subject to interest being charged. So according to the credit card provider, the interest may differs. A credit card also differs from the cash card. Cash card and charge card is different from credit card, which can be used like currency by the owner of the card. Most credit cards are issued by bank or credit unions. Next one is debit card. It is also known as bank card or check card. It is also made up of plastic cards that provides the card holder electronic access to his or her bank account at a financial institution. Some cards have a stored value against which a payment is made, while most relay a message to the cardholder bank to withdraw funds from the designated account in favor of the payee designated bank account. Already the amount will be stored in the card, then according to the purchase, the message will be get in the phone or SMS alert. The card can be used as the alternate payment method without carrying the cash. If the debit card is there, spending or purchasing will be possible in the market. In some cases, the cards are designed exclusive for use of the internet, and so there is no physical card. Sometimes the scan will be available. Automatically the amount is credited without the PIN number. In many countries, the use of debit card has become so widespread that their volume of use has overtaken or entirely replaced the check and in some instant cash transaction. So for comfortable use of customer anywhere, anytime transaction and also withdrawing amount from the ATM is possible to the debit card. This is the one of the mostly using by the customer without carrying the cash. Like credit card, debit card are used widely for telephone and internet purchases also. However, unlike credit card, the funds paid using a debit card are transferred immediately from the bearer's bank account instead of having bearer pay back the money at a later date. Means credit card is we can purchase with our limit of the credit card. We want to pay the amount within the limit the bank is given to us. But a debit card, we are already having the amount in the bank. We are using our amount for the purchasing, that is your debit card. In both the cases, every time we are spending, we will get the SMS alert. Check transaction payment system, that is CTPS. Transaction is the process of stopping the flow of the physical check issued by a drawer to the drawee branch. So the check, if we are depositing, there is some process happens in the bank. So transaction is the process of stopping the physical check issued by the drawer. So physical presence to give and take the check is limited in the CTPS, using the CTPS system. In this online check can be given to the bank and the transaction of the amount will be happens. And with the implementation of check transaction, the need to move the physical instrument across branches also minimized. There is one branch house to carry the checks from one bank to another bank. The limitation of paperwork also happened after the CTPS. This would effectively reduce the time required for payment of check and the associated cost of transits and delay in processing, etc. So once we are submitting the check through online, every process will be completed and immediately amount will be transaction to the people who want to send by us. So next one, electronic check proper definition, a form of payment made via the internet that is designed to perform the same function as a conventional paper check. Same like paper check, it will be working because the check is in an electronic format. It can be processed in fewer steps and has more security features than a standard paper check. If we are carrying a paper check, it may be misplaced or missed. In electric check, that will not be possible. Security features are also there provided for electronic check, including authentication. Who are applying that authentication will be there. Public keys, cryptography is there, digital signature is there, and encryption among others also there. The particular code is there, through that only the process will be take place. So encryption and decryption security is very much more in the electronic check. Thank you students for listening e-banking topic. Thank you.